some of you know, I own very good stock, CloudMD, some point Beyond Meat stock, and even Coinbase. But I decided to sell them, and I'll share my reasons why. So in the last 4 months, I decided to trim some of my holdings, my weaker positions, my more speculative stocks, because, at first I have too many stocks in my portfolio. Secondly, it's because I have a framework for selling my stocks. Then rather than just telling you what stocks I'm going to sell, which I kind of told you already, I just thought it'd be much, much more valuable to walk you through my framework so that eventually you can use my framework to decide when to sell a stock. And I hope that by sharing my framework that this helps you in your investing journey, because I talk the talk and walk the walk. Now, in one of my investments, I did lose 20%. Now, the good news is that whenever I make more speculative plays in my stock portfolio, I always put in such a small proportion of my capital because it's just really getting my skin in the game so that I can actually watch it. Otherwise, if I don't put any money in it, I don't look at it. I don't look at the performance, nothing. So these types of stocks don't make it. I think it only made up 1% of my entire stock portfolio, but no matter what, if a stock falls 20%, it always hurts. It's like ripping a Band-Aid really, really fast. That's how it feels every single time. Now, before I jump into my detailed process of why I decide to sell these 4 stocks, I want to share my process. And I'll just, rather than taking up a lot of your time, I'll just let you know upfront. Now, the 4 reasons to sell a stock. Number 1, your investment growth thesis no longer holds true. You had a future outlook of the company, but the outlook is kind of looking like Number 2 is that the fundamentals and the financials of the company are kind of deteriorating. It's something like you didn't expect, like the profit margins are decreasing. The revenue growth is not meeting your expectations. The accounts receivable are growing way faster than the revenue growth, or you're just not seeing any way they're able to gain more and more cash flow. These are good reasons to sell. Number 3, you don't agree with management. Maybe CEO has changed over. Maybe the direction of the company, say the latest acquisition, you're like a big question mark. The point is that you don't agree with the decisions that the management of the company are taking. And number 4, well, you might have found a better investment opportunity. Well, if you found stock A can potentially give you a higher upside versus the risk versus stock B, then you might want to jump over to stock A. So that's the better opportunity. Are you watching this channel and haven't subscribed? Why not? I'm a Canadian YouTuber that loves talking about investing in stocks, in real estate, based on my 20-year journey, and I like to share all my lessons to help you grow your income, build your wealth, and, well, design your ideal life. Now that I'm semi-retired, I can make all these videos for you. So if you haven't subscribed, please hit the subscribe button and the bell notification button to get the latest and greatest videos coming to you every single week. So let's get back with the video. Now, the first stock is Beyond Meat. Now, I know I made this purchase way back when Beyond Meat fell to all-time lows. And I always knew the valuation was pretty high. But, my kids eat a lot of the burgers, and I just thought, okay, well, I'll just put a tiny, tiny position because the future outlook of the company is super compelling. The total addressable market for alternative meats is so huge. So, and there isn't actually a lot of competition for Beyond Meat. So I thought that those were pretty compelling reasons to at least start a small position in them. But then over time, as I'm walking down the stores and just checking out, the Beyond Meat products, I was just like, how come it's always burgers and it's always sausages? Because as I'm reading the investors' presentations, I thought they can produce dumplings, they're going to produce way more product offerings. I know that they have chicken McNuggets or an alternative chicken nugget. They're going to have more and more different products, but I just found the pace of execution is super, super slow. And then it hit me. It must be really hard to actually even expand your product offerings in grocery stores because guess what? Everyone's fighting for the same amount of space on the aisles, in the grocery section, in the freezer section. So I feel like the food industry is it's a lot slower to execute and it's a lot harder to get real estate in the aisles. So this is where I was like, maybe this is one of the biggest reasons why I didn't like Beyond Meat. And then another thing was they announced that they were expanding in China, which is all great and good. But I just thought, how come you just won't execute and just devote your time in the United States and Canada and increase the product offering? Why would you go into another country when you haven't even executed in the United States and Canada and go to another country and like completely with a different type of audience and sell your products? I was just thought, that was like, I didn't like the direction management was taking. So this is the reason why I sold Beyond Meat. No, I did not sell when it hit all-time lows. And I've been selling covered calls too. So I could say that I made a pretty decent amount of coin on Beyond Meat, but I just lost conviction in the stock. So I decided to sell because I don't agree with management's direction. The second stock I decided to sell is Very Good Food. Okay, now this was actually a very recent sell. And the reason why is because I was so sick and tired of their shares diluting, okay? Their financials were, on the top line growth, it looks really, really compelling. Their sales growth is increasing. But then when you dig down and look at the financials, I just saw the accounts receivable growing. I saw that they're issuing way more shares over time. And I actually visited Vancouver and I was like really excited to see the flagship restaurant to open their products and offer their very good food products because Vancouver is a very, very it's a city that is really, really healthy. And I just thought in any city it would be successful, it'd be in Vancouver. I was so disappointed that the flagship restaurant was not open and I couldn't tell, how popular the products are, right? Personally, I'm not a vegetarian and I really don't like 90% of the products. I think it doesn't taste very good. And I did a taste test up here. You can check it out up here. And my kids and my husband didn't really like it. So then at the end of the day, I decided to sell the stock because I didn't like the pace of execution. I didn't like their share dilution. I didn't like the fact that they're planning to expand in China when they haven't focused and getting it right in Canada and the US. And I can't just go to a store and buy very good butchers, like the different types of sausages and burgers that they have in the grocery store. So to me, it was another aha moment. It's so hard to get real estate space in a grocery store. And it seems like execution is going to be like long and drawn out. So this is why I decided to sell Very Good Foods. Number 3. CloudMD. I decided to not hold on to CloudMD. On a very superficial look, when the market cap's around 300 million-ish, and that's going to date today's video, and the projected annual run rate of revenues around 120 million, that's pretty compelling because you look at the market cap, look at the revenue, it's software as a service, so that has potentially high profit margins. But when you dig a little bit deeper into the financials, which already caught red flags in the last time I looked at the financials, the profit margins were decreasing. And the thing that was driving me nuts was that they kept making acquisitions, diluting their shares. And I just thought, okay, totally get it. You need to acquire, build up your moat across Canada and the United States, offer more of your services, get it integrated, totally get it. So you need to raise more funds. But you know what? You don't have to always issue more shares to raise capital. Go borrow money. Go get private money. Somehow they always have to dilute their shares. Now I know they addressed it in their last performance earnings call, but to me it's just like, if you look a little bit deeper and look at the accounts receivable, the accounts receivable is essentially saying this is what people owe you in money, and you haven't received the money. And as I'm noticing this, the accounts receivable is increasing every single quarter, and it's making up a significant percentage of their revenue. And that is just a huge red flag. So there's just so many things that are compounding that I didn't agree with. So I decided to sell the company. I might get back in when the financials turn around, when they have a compelling vision, when they're executing way, way better than they are right now. And it might take a couple years before this really becomes fruitful. But you know what? I'm cool. I can watch on the sidelines. I'll sit back and watch. Fourth stock I decided to sell is Coinbase. Now, the reason why I decided to sell Coinbase is because the investment thesis no longer holds true. My growth thesis for Coinbase was the fact that, well, I knew it was a speculative play, much more speculative than, say, investing in Tesla or Google's or Apple's or Microsoft's of the world. But it also had way more upside because the revenue growth was growing really, really well. It grew even before the pandemic was happening. Cryptocurrency is a trend. There's a lot of, if you didn't know, Coinbase is an exchange for cryptocurrency. So they make a ton of moolah on the exchange rates, on the commissions. And the thing that I didn't like about Coinbase was that there's a lot more competition coming in. There's Robinhood, there's Wealthsimple, there's more and more brokerages that are offering pretty much low commissions or zero commissions for cryptocurrencies. And so to me, it just seems like there's a lot more competition coming in. So I didn't know what was the competitive edge of Coinbase. So I was like losing my compelling reasons for why I invested in Coinbase in the beginning. Secondly, another reason why I invested in Coinbase in the beginning was because I knew that they held a lot of Bitcoin. And they were, and a lot of exchanges, cryptocurrency exchanges, are in the decentralized finance where they loan out their cryptocurrencies for interest, and a lot of investors can go to their brokerages and do that. But Coinbase, you can't loan out your cryptocurrency. So if you own a ton of Bitcoin or Ethereum and you can't loan that out, then you're not collecting interest from it. So to me, it's just not a good reason for investing in Coinbase personally. Maybe in the future, I might get back in, but right now, I'm just losing my growth thesis. And I know that there is potentially more opportunities with Coinbase when they get into the NFTs, and there's a lot of money to be made in NFTs, but right now there's just too much competition. They can't loan out the cryptocurrencies. They get in trouble because they asked SEC to do this and they weren't able to do that. So to me, it's just not a compelling reason to invest in this company. So I decided to sell at a loss, and I also found another investment opportunity. That's actually more reason why I decided to sell Coinbase. So I will let you know what other stock that I decided to invest in. It happened around the same time another stock was also going, and I love buying stocks when they go like this because it doesn't reflect the quality of the company, at least in my reasons. So I'll let you know in another video which company I bought in. Anyways, I hope you found this video super helpful in knowing reasons why to sell a stock so that you have a framework that you can follow for yourself.